Hi, welcome to the Market Alert for Tuesday the 21st of April 2015. Starting off in the 5-minute chart, this signal isn't valid. This is the first price bar of the trading session, the 235. This one is the bar that completes the first 5 minutes. Then we see this professional buying bar coming in, and then prices continuing higher, driving through the 18,000, trading up to a high of 18,030 before finding some selling coming into the market, which you can see in the volume window at the bottom there. And then we see the market buying back and closing above the psychological level with the PTI there. So let's just mark this up. So then we see the market driving higher, trading up to the 18,051, trading through this to the next minor psychological level there of 18,062, and then we see some selling coming into the market, which again is reflected in the volume window below. But also notice that the selling isn't as great as the buying bar, but there is some selling around, so we then get a potential sell signal there. But just before we move on, let's just calculate, and let me just show you. In this trade, we've got that selling coming in. We're into the first half hour of the session. So from the entry point up to the psychological level there, being conservative, is around 27, 28 points. In fact, it's around 31 to be precise on the actual trade. So then we see the selling coming into the market, and we have a sell PTI. We do have weakness in the background from Friday, but what you tend to find is if you have a really big down day in the Dow, you get a reversal the following day to the upside, which is what we're seeing here. So the sell PTI comes in, but this is immediately followed by a buy. So we would have cancelled the sell signal there and then marked up the buy. Now what's happened here is that the market has actually filled this and then taken out the stop immediately as well. There was obviously some sort of news that hit the market. The market moved higher, then reversed and came down and hit the stop, and then of course found support, which is not unusual really, again given the background that we had the down day on Friday and the market was going to move back to the upside. Now this clear red triangle, when you reload the chart doesn't know whether the price was hit first, the entry price, or the stop loss. There's no way of working it out, but I can assure you that just by going into the 1 minute chart, that the entry price was hit first, and then when the market came down. So you can see this in the 1 minute chart here. So the market filled this order and then reversed, which happened in real time as I was watching and trading the market there. So on this one we had to take the loss on this PTI. So again, just to clarify, the clear red triangle appears when you reload the chart because the software doesn't know whether the entry price or the stop was hit first. If we have both hit in the price bar that actually follows the order, which you can see here. So the order was hit, then the market just traded straight down. They are rare, but this happened during yesterday, and as I said in Monday's Market Alert, there's no news out this week, so the market can do whatever it wishes to do. So then we get another PTI, and we see this time the market going up through the 20-point scalp, and again, see how the markets use this minor resistance here at 18,087, and then the market stopped here as well. So this gives you the chance to make up the 20 points out of the 24 there that we just had to take the hit on here. And this one, of course, not filled. So later on in the session, we've got a PTI, PTP and XXX there. And again, you see the market taking out the support now as the market came back down to in this area, trying to go back up with some selling coming into the market, and then prices moving lower. So we see these also, again, notice the minor psychological level here at 18,025 where the markets found support, and then prices start to reverse, making their way back. And what you've got to remember, this is a quiet time in the session. You see the market trading down to here. That's 16 points maximum on this, and then we get this reversal. But what's interesting here again is that we've got this narrower trading range in this bar than the previous bar, and the volume is greater, so there is some buying support coming into the market, and then we see prices reversing. And when you see this type of thing, you can consider moving the stop to break even to actually mitigate any potential loss there. So the next signal, we've got the market trading through the back through the 18,050 with the PTI. This order is filled, but we've got the selling to the left. So once the market gets to that sort of area there where we see the selling, we see prices put in a new potential signal there, which is late on in the session. This is at 25 past 8, which for me is too late in the session, even though the market comes back down. So on this one, I'd be looking to actually close out this, and if you didn't close out, then you'll be taking another 22 point loss on this trade by the close of the session there. So not a big range yesterday. I mean, we've barely got to 100 points once the market actually got going. You can see how the market traded in a very narrow range late on in the session, and then eventually worked its way down, but after the market had closed. So there again, you've got no news being released into the market, and therefore the market having difficulty in deciding which direction to go. So a bit of a frustrating day yesterday. 27 points there, we lose 24 here. We get the 20 points back. We've got potential break even there because of the activity that we see here by reading that, and then we've got another loss of 22 points on this bar here as the market went through. And then we've got the resistance and selling to the left there, which you can see, and again that minor psychological level there, and then eventually the market moving its way down, but then buyer pressure coming back into the market for this trade as well. So not the best of days, but not too bad overall by the end of it, and again that's because of the lack of news. Let's just have a look at the daily chart and see how this looked during yesterday's session. You can see the market there trading back to the upside for the session. You can see why the sell signals fail, because the market wants to move back to the upside. And if we just draw in the 76% retracement off this bar down to here, you'll see that the market's already through it. We've got the high of this bar, the professional selling bar as well, to actually negotiate if prices are to move higher. 18,117. So at the moment the market's already making its move, which is why I've had the signals flashing on the screen. We just have a look at the current picture in the 5-minute chart. You'll see there we're starting to move higher there as the market opens in Europe. So we need to drive through the 18,117. This could quite possibly happen pre-market, and then we've got all of the other targets there on the chart as well. I'm just going to tidy this up a bit and then draw in the all-time high there, which is 18,280, and that's where the market's likely to trade up to. And news today, nothing. Again, another quiet day, and it's more or less like this for most of the week as well for the US markets. It's a very quiet week economically, which will allow them to actually move the market to the upside unless there's any negative news coming out. So again, keep this in mind when the markets open and you get a lot of activity initially. Once that starts to quieten off, it could actually stay like that for a while. Finally, on the implied volatility, let's just have a quick look. Friday session was 12.56, yesterday 11.52, so you can see a drop there, and again that's reflected in the chart down to 11.52, so a 1% drop in the implied volatility, again indicating that the market wants to move higher there, especially after the shakeout on Friday, that we're doing the damnedest to make up the ground and move prices back to the upside there. Right, that's it for me for today. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated, and also for the emails as well. I shall see you in tomorrow's. As ever, thanks for watching.